Hello traders and welcome to another video review. Today is Monday, July 4th, 2022. Let's take a look at the Forex calendar on this Monday morning. The calendar, as you can see, is kind of busy. However, there isn't many economic data releases during the day. Overnight, we got the building approvals from New Zealand, way better than expected, 9.9%, almost 10%, while the forecast was minus 1.8%. So we will definitely take a look at the New Zealand pairs, New Zealand to the American dollar first. Home loans, as you can see, were published as well. And during the London session, we got German trade balance shrinking minus 1 billion euro. While the forecast was 2.7 billion. CPI data from Switzerland increasing 0.5% versus 0.3 expected, but it's still better than 0.7 last month. So maybe there's some kind of a peak of the inflation in Switzerland. And during the rest of the day, as you can see, we got plenty of speeches from various officials. We got speeches from the Buba Bank from Germany, of course, 12:45, 2 p.m., 4 p.m. We got data from Canada, 4 p.m. Bank of Canada Business Outlook survey. Then we got speeches from the ECB Edelson, 4 as well. Then again from German Buba at 5 o'clock, and then at the end of the day another speech from the ECB official. So plenty of speeches. I'm not quite sure how much those speeches will increase the volatility on the euro, basically euro related pairs. This is German, this is Eurozone officials, so euro should be reacting to some kind of the remarks, especially if they are unexpected or surprising for the market participants. Nevertheless, let's take a look at the charts. Let's start with the US dollar index. Daily time frame chart of the US dollar index is very well analyzed by us. It's a familiar to us. We got the last swing high 105.76. We got the recent attempts to rally. However, if you can see these two longer shadows on the top of the candle, it is telling you that inside of this zone 105.06 and the top 105.76, there is an increased bearish activity, and the bears are trying to sell the US dollar as much as they can. So it looks like after this triangle was broken to the upside, surprisingly, the bears are now trying to protect the last swing high 105.76, and are trying to push the market lower, of course. So if they fail, we will have another long-term swing high on the US dollar index. If they will be successful, and after this breakout from the triangle, that means this didn't work as it should, and we got another leg to the downside, of course. Key technical support 101.27. This is the level that must be violated in order to see some sort of the longer period of the selling pressure on the US dollar index across the board, basically. So please keep an eye on the current situation on the US dollar index. Let's take a look at the New Zealand to the New Zealand dollar to the American dollar pair. There you go. We are still trading below this trend line, despite the fact that the bulls tried to break above this level, above this trend line, and above the level of 6,376. We have a new low. This is the swing low made at the level of 6,142. So we have new monthly low. This last month low had been violated. Sorry, this last month low had been violated. So we have 3 consecutive lows. This one, and this one. And the market is trading below the trend line, short-term trend line. This is not even like, I don't know, 1 month or something. Below the key technical resistance, short-term technical resistance, below key mid-term technical supply zone here, and of course last swing high 7,031 pips. The outlook remains bearish on the New Zealand dollar to American dollar, and the momentum seems to confirm this outlook. Let's zoom out, and we now can see what kind of trend is this. Clear downtrend, consecutive lower lows, consecutive lower highs. Nothing unexpected can happen here. As long as we move, of course, to the downside, there's plenty of room here to cover by bulls. By bears. This is 5,472. That's the swing low. So there is still around 800, over 800 pips to be covered to the downside towards this low from the 2020 to March 2020. All right, so there is still a room to drop for the New Zealand dollar. For all of you who think, okay, it cannot go lower, it can. There is still a room to drop lower. The next, like a significant technical support, is around this lows here from April and May 2020, roughly around 6,000 and 5,920 pips. Okay. So the outlook for the New Zealand dollar is bearish. The outlook for the US dollar is kind of tricky right now. Let's take a look what is going on the other markets. Let's check the majors. Euro dollar. What is going on the euro dollar? Plenty of speeches from the officials today. Well, the euro dollar is trying to resume the uptrend. Well, the US dollar index is trying to resume the uptrend, and the euro dollar is trying to resume the downtrend, of course. This is the low, right? The swing low from the this is from the May 2022. This is from the June 2022, the middle of the June, and this is just the beginning of the July 2022. So we almost broke below the last month low and the low from the May. So there is a clear bearish pressure here. It can be seen here when we have this long wicks to the upside. There's clear bearish pressure, and the bears are still trying to make a new lower low, swing low, and the momentum is helping them, because it looks like this there is still a problem for the bulls to break above the level of 50, perfectly holding the bullish attempt to rally. Of course, right now in the short term on the euro dollar, the key technical resistance is the level of 1.0628, 1.0643. It's been marked by this blue arrow, and it's been known for many days right now. I showed it to you many days ago. I think it was like 2 weeks ago already. So it's still the key technical resistance. We want to go lower. It looks like we want to go lower on the euro dollar. So please pay attention to the key technical support on the euro dollar. Let's take a look what is going on here. Where is this line coming from? And that's a very long line, because the lows are from 2017. So we are approaching 5-year lows, right? Last time euro dollar was seen on this level 5 years ago, basically. Okay, so please notice the fact that this is very strong downtrend, and every time we trade out of this channel, the main down channel, the market usually accelerates to the downside. So last but not least, let's take a look what is going on the gold market. And this is, of course, a very interesting situation from our point of view, because it looks like our triangle pattern didn't actually work here, right? Because this broadening triangle didn't actually work, so we abandon this idea. Right now we have a very nice pin bar here, just making new lower low. This low is 1,786. This is 1,784, so that's $2. So let's just find out what's happened next. We have a very big bullish pressure here, a pin bar on a daily time frame chart. We are still waiting for this market to resume the uptrend and hit the key technical resistance 1900. The broadening triangle idea didn't work, or maybe it was A, B, C, D. Maybe it was just completed here. However, it should go to the upside. However, again, it was very tricky triangle, very rare, very tricky. So it was just an attempt to see how this idea will work. It didn't. So what do we have here? We have another marginal lower low, $2, not much. But if we see a red candle here covering the whole pin bar and closing below 1784, this is a very strong bearish pressure signal. Okay, so please keep an eye how this market will now react on this pin bar. Will it rally, or will it just bounce and then keeps moving sideways? So very interesting situation on gold as well here on the daily time frame chart. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.